We all have bank accounts, whether it's for your paycheck, day-to-day payments, saving, kids' education, or others. And setting up right bank accounts is the first step to manage your money effectively. So join me and Alex today to learn more about types of bank accounts, pros and cons, what to choose, and how to.
Welcome to the Money DNA channel. Money DNA is a financial fitness community where we bring everything about money and beyond money concepts in life to help you create healthy money habits and to be financially fit for good. It is important to understand that the advice is general in nature and does not take into account your personal objectives, financial needs, and overall well-being situation, and it may not be appropriate for you.
Hi everyone, it's Winnie here. Thank you for tuning into Money DNA. We'll be looking at bank accounts. Set up the right bank accounts to manage your money, part 1. Join me today is Alex May. Alex has nearly 7 years of banking and finance industry experience. His experience is across home lending credit assessment analysts to personal banking consultant in Big 4 banks. With his work, he has helped customers achieve their banking and finance needs and offer the support to guide them on this journey. Alex, welcome to Money DNA.
Pleasure to be here. Thanks, Winnie.
No worries. So many people actually come to me because they want to create a healthy habit for money management. So one of the most important things I usually say to them is they need to make sure that the environment is going to be aligned with their goals. So setting up a right bank account is actually the same thing. If you are going to make sure that you are going to achieve a certain financial goals or money management, the best way for you to know is actually make sure that you are going to set up a right bank account. That way it's going to support you to achieve your financial goals, whether it's going to manage your money efficiently, pay off your debt sooner, or saving for rainy days or future investment. So with this topic, I couldn't think of anyone better than Alex to share his knowledge with our audience. So Alex and I actually worked together way back, and oftentimes I actually saw people coming to the branch with a confusion because they didn't really know what to do. But after talking to Alex for a while about their banking matters, they usually work out of the door with clarity and also a big smile on their face. So Alex and I decided to organize a series of banking matters together and navigate your money management. And I wanted to start to kick off with the basic, which is bank account. So today we're going to talk about set up the right bank account to manage your money. And before we start, Alex, can I please just have you introduce yourself to our audience about how you get to where you are now?
Certainly. Hi, everybody. So I'm Alex, and so I've worked with Winnie in the past in banking. And I suppose to start off, the reason I chose to move into finance and banking was I was introduced to it by somebody in a bank branch. So I was working for Vodafone Telco at the time. Quite a lot of banking and finance people come from the telco industry, and they saw how I performed in my customer service in telco industry and offered me the opportunity to move into finance and banking. And I thought of it as an exciting opportunity to move into a new field and gain some new experience and help support obviously customers and clients with their banking needs and for something I haven't tried before. I started my banking and finance career with National Australia Bank as a teller. So I started at the bottom with no previous finance experience, mind you, just customer service and sales in the real retail industry. Quickly working my way into the customer consultant advisor role within 6 to 12 months. So learning teller and then moving into personal banking. From there, I was able to learn all about accounts, individual, business, credit cards and personal lending, and pass this knowledge on to supporting the bank's customers and clients. From there up until now, I found residential home lending quite fascinating. So a few years ago, I started to develop in the in-depth and sometimes complex world of residential home lending.
Perfect. Thank you, Alex. And I think that one of the reasons I invited Alex to come, not so much about just the fruitful knowledge that he has with the banking, especially personal banking, also home lending side of things, which most people are dealing with every single day. It's more about Alex is at that age group that a lot of people are actually trying to find a job and didn't really know how to. And I think that with Alex's experience, it actually is going to let us know that the very first thing, not so much about the background or not so much about your qualification, is actually a right attitude. And then the attitude starting towards to, whether you are going to willing to learn something, whether you are going to be humble enough to really absorb all the knowledge that you can, and at the same time also have the right network. And I remember Alex actually said to me that, did you say that you went to the branch and then spoke to the branch manager and then he offered you a job at Satella around that time?
Correct. Yes.
Yeah, so I guess that if you're really interested in working in the bank, might as well just go to the local branch to wander around. Maybe they are going to offer you a job. And who knows, within the certain times, you may land it into a certain roles that you are going to get into. So never going to lose the hope on things. Yeah. So Alex, why don't we start from that? I guess that since we're going to talk about bank accounts, let's starting from the very beginning. What type of customer do they usually see in the branch, and then what sort of needs do they need to have?
I suppose the typical customers you would see in the branch are individual, so single individuals,
yep.
or couples in households.
Yep.
This can also sometimes be households with friends, to people renting or boarding together. But then also a majority will be a couple in a relationship who are looking to open up their first bank accounts together as they move into their own property or home,
yep.
and want to make it easier for themselves.
Yeah, that's so true. And I think that especially when we're working the branch, lots of people are whether coming to the branch by themselves or with another partners to come aboard, whether it's going to be the account for themselves. Sometimes they even set up an account for their children. So why don't we start it with the basic accounts that we usually set up for customer, and also you can share with us with the different functionalities with different accounts. And then we can talk about how are we going to set up an account, how are we going to close the account, and what sort of things that you need to have with those kind of jazz. How about that?
Correct.
Okay. So hand it over to you now.
Thank you very much. So with transaction accounts and savings accounts, those are your two main types of everyday accounts that you would typically come into a bank branch to open up. Your transaction accounts are commonly for everyday spending or bills and direct debits. Your savings accounts are usually separate accounts for short to mid-term goals, such as a holiday, saving for your first home deposit, maybe a wedding or educational needs, or other savings goals such as a car. And it's always obviously important to understand the difference between the two, depending on your goals as to why you've come into the bank to open an account as well.
Do you usually ask them the very first question as what's the purpose for them to open an account?
Yes, 100%. Because in the end, it's always important to understand as to what is the reason a client has come into the bank for as well. Not just to offer them everything that's available by the bank, financial institution, but so that ensures and matches their needs there and then as to why they're coming. They may have come in for an everyday bank account, but this time are not looking to do any savings at this point in time.
I see. Okay. And what's next?
Terrific. So with your transaction and savings accounts, its access is always important as well to a client. So it's understanding those differences with a transaction and savings account, how you can access those funds. So whether you can access, and generally with a transaction and flexible savings accounts, you can access those at any time, which is always important, can be important, quite a lot of importance to customers and clients so that they have those funds immediately available.
Can I also ask a very dumb question? So generally speaking, it doesn't really matter what banks they are dealing with. for us to access the money that we save in whether the transaction account or a saving account, do they charge us any fee for access?
Most financial institutions will not charge a fee to access transaction or flexible savings accounts at the time.
Okay,
as well.
I see. That's good to know.
But it is also important to understand some reward savings accounts with a higher interest rate. While they are flexible, if you do withdraw funds regularly, this can impact on the credit interest that you earn as well as penalties.
I see. And I think the next one, which is something that a lot of people would love to know, is, am I going to earn any interest by putting my money into the bank account?
Yes, 100%. The difference to understand between the two, though, of everyday banking accounts and savings accounts is everyday transaction accounts will not earn interest. They're purely there for, obviously, everyday banking, spending and bills. So it would not make much sense to have an interest earning account where money is going to basically be flying in and out of the accounts as well. Your savings accounts, as generally these should be for the purpose of keeping money to the side out of your everyday spending bills accounts, will give you earned credit interest as well. These can be from, depending on the bank's interest rate, that is also affected by the Reserve Bank of Australia. Depending on the cash rate at the time, this can be anywhere from 1 to 3%, in which basically at the end of the month, you will get a little bit of credit interest into your savings account, depending how much funds you hold in the savings account at the time.
I see. Also, another thing right away I think of is like fees. Earlier we touched on with whether it's going to be any access fee. We know that most of the banks don't really offer that, or don't really charge that. Is there any other fees that they charge, for example, open accounts or management fees? Is there any certain things like that?
So the great thing about the finance industry these days with online banking and such flexible access as well is a majority of financial institutions will not charge an account opening fee or a management fee.
Awesome. Okay. Also, another thing I noticed is sometimes when you are open account, you actually have another question that I found is also quite fascinating is the card. So the debit card is what it calls to attach to the account. So when you open a transaction account and also saving account, do they usually come up with a debit card?
A majority of everyday transaction accounts, or if you, so for example, if you have 2 transaction accounts, one for everyday spending, one for bills, you can get a debit card for each account. This will usually be a MasterCard or Visa facility. It's whilst they are 2 different types of card facilities, generally there will not be much of a difference making payments in Australia for the 2. Only when overseas, some countries have additional fees for the differences between the 2. Your savings accounts will not come with a card access account, as the purpose of the account is for savings benefits.
Yeah, beautiful. And I think that a lot of people actually will go to the branch to set up a term deposit. I guess that for the background as a financial planner's point of view, term deposit is for investment. Even though you will be able to come to the counter to open a term deposit is actually a contract between you and the bank. So when you are going to set up a term deposit, just remember earlier we mentioned about the purpose. So if you are planning to have your account set up as a day-to-day expenses, earlier Alex already mentioned that would be some sort of like a transaction account will be suitable for this matter. But if you are going to look for something like a short or mid-term goals, like earlier Alex will mention about saving for the cars, holidays, or first home deposit, all sort of things may require you to access to that in a short or mid-term goals, then maybe having a saving account will be better. But then for the term deposit, because you are going to set up a contract with the bank, there is a time frame here. And within this time frame, you are not going to be able to access to this account. So when we are going to set up account, usually the counter may ask you, how long would you lock this time in? And the time depends on how long you are going to lock the time. The longer it is, the higher interest that is. So that's probably something that we need to educate our audiences. Now, I wanted to go back to you is because we mentioned about term deposit. Earlier we mentioned about the fee itself. Is there any fees involved to open a term deposit or close the term deposit?
So it's important, as you've explained, Winnie, to understand your sort of short-term or long-term savings goals as well. So obviously flexible variable savings accounts can be accessed at any time. Fixed-term deposits will not be so flexible as to accessing your funds at any time. As it is, as Winnie has explained, there's a contract to have a set amount of money invested into a financial institution for a period of time as well. This does relate back to the fees. So to open the term deposit, generally there are no fees to open the term deposit account. A bank, financial institution will have usually a requirement of a minimum of $5,000 invested into a term deposit. This can be anywhere up to, if you do happen to have a spare $1 million, this can go quite up to high numbers. You will then get a fixed interest rate for that period. So it's important to understand that your interest rate will not change over the entire period of time. So it's always important to understand how long you want to put the funds in for. If during, for example, a 6-month term, 3 months in, you decide to withdraw your funds, you will need to give most financial institutions a 31-day notice. You will incur penalties, which is on breaking the funds out of the term deposit. This only comes in the form of the interest that you've earned on your term deposit, so credit interest that the bank will pay you. There will be a reduction on this, so you will reduce. So in the sense that is sort of the fee or penalty to do with breaking the term deposit. And that 31-day notice period can only be immediate if it is for compassionate or personal or hardship reasons as well.
I see. So let's say that 31 days is purely about a month period of time. But what if I need to access my account right away? It's just because I have other purpose.
Unfortunately, most financial institutions, when you sign a agreement with the bank to open up a term deposit, you sign to the terms and conditions that you are required to give 31 days notice. Most financial institutions will not waive this unless there is extreme personal or financial hardship conditions, and that's subject to the bank's approval. Otherwise, it will be required to wait the 31 days from the date of notice to the bank for the funds to be available.
I see.
So it's important to understand if it's right for you to lock those funds in for a long period of time.
Yeah, okay, that's quite clear to understand. Now, we pretty much touch on with all the functionality for the accounts. So let's talk about the how-to then. How am I going to open an account?
How to open an account. So the good thing is, in this day and age of technology, there's a couple ways to open a bank account as well. This obviously the branch is the most commonly formed one that's known, to go directly in person to a branch. Otherwise, there is always online options to open a bank account if you don't have such time or availability to go to a branch if there is no location near you.
Yeah, and I think that especially through the COVID time, we also understand that a lot of branches decided to be closed due to the traffic and also the safety reason. So you may not be able to see as many branches nearby anymore. So what the banks are doing right nowadays is they actually open up the online banking facility for you to open an account or even doing most of the banking requirements online. So if we are going to be able to open accounts through the branch or whether doing the online, what sort of requirement do we need to have?
So the banks will generally have a requirement of identification and understanding of taxation status as well with an individual or a couple in the household for that. Identification is always the most important. So the most commonly requirements is a driver's license or passport, Australian, or a overseas passport. But if these are not available identification that the applicant holds, there is always alternate documents that can be utilised. It's always best to contact the financial institution through their available contact options on their website or the branch to understand what these requirements are to be able to open them up. This also moves on to understanding of overseas taxation. In Australia, it is a requirement to declare if you also have tax residency overseas in United States or other countries, to also understand what your tax identification number is in that country. So in the United States, it's your social security number. In United Kingdom, I believe it's a pension identification number or some other government identification number, and always to have this on you when opening a bank account.
And I think that this is also very important for our audience to know that the reason bank is asking for the taxation, your tax account information, is because earlier we mentioned about your saving account, term deposit, or any sort of accounts that you are going to open or have the bank to manage for you. It's likely for you to incur some of the interest. Interest is considered as a type of income. So when we're going to receive the income, of course, that may trigger to the taxation needs. And that's why the bank is always going to ask you for the taxation status. If you don't really apply or didn't really offer or disclose any of the taxation, is there any of the downfall for that?
If you have not disclosed your taxation status, especially Australian tax file number, to opening your bank account, you will find that there will be a withholding tax placed on your credit interest earned, which can be claimed back at tax time, from my general understanding, although that's best to check with the ATO, Australian Taxation Office, on that one. But it is sort of a fee, as you would, that comes out of the credit interest if it's not disclosed. If you do then later on disclose your tax file number, Australian tax file number, to the bank, you will then stop seeing withholding tax taken from the credit interest.
That's really good to know. And I guess that if the audience will be interested in withholding tax and any sort of tax, we actually is going to have a series of the taxation things with accountant. And we can also ask the accountant to explain that to us. And of course, if there's any other needs that you would like to listen to, that will be feel free to also leave a comment or any questions to us. And I also wanted to touch on with one final thing is, of course, earlier we mentioned about ID, and also make sure that you are going to disclose as much information as possible. It's because now you are giving the bank the authority to manage your money, but at the same time, bank is also taking the responsibility to manage your money for you as well. They want to make sure that you are going to be a right partner or right customer for them. So don't think that bank is not going to check on your account. They are actually going to go through things and make sure that you are going to be a right customer. My personal experience here is while I was dealing with the small business customers there, lots of the customers may be having their own practice or maybe having their own service kind of business out there. They didn't really think that it's going to be a really big issue for them to disclose a lot of things. While the bank is going through the bank account, realize that one of the business that they were doing is considered as a little bit dodgy. And what they do is they send a letter to the customer and just say that, hey, I'm sorry, we probably is not going to continue this partnership. And then they decided to just close the account and then request the customer to go. So I guess that when you are going to enter into any of arrangement or any of the contract, make sure that you are going to understand about all the condition and also disclose all the information to the other party. Now, what about closing the account then?
So closing an account, this can be for various reasons. Obviously, if you no longer require the account, your goals have changed, financial goals have changed, and it requires, or you're just seeking to open a bank account at another financial institution as well. Majority of the time, closing a bank account will require you to go into the branch for physical face-to-face interaction. Some financial institutions will allow this to be done over the phone or through online banking, but that is subject to the financial institution's risk requirements. Otherwise, the majority of institutions will require you to go in person, so that we're obviously making sure that it is the right person who is in front of us when closing their bank account, and that they've been ID'd correctly, as there will usually be funds to hand back to the customer that are still in the account at the time.
I see. Now, if we are going to be able to manage open and closing accounts through online or even the face-to-face, what about making transactions? Does that mean that we can also only make transactions through online and also go into the branch?
So the great thing is there's so many different options these days, especially in the digital technology age, to be able to make transactions on the account as well. For your everyday banking and savings accounts, flexible variable savings accounts, you can generally make transactions through online, through the computer. Mobile banking applications as apps on your phones are quite common, and also a more convenient and easy way, especially if you're on the go in the morning to work, or if you don't have the time or a computer available to you. The other sort of two main in-person interactions that are available to do banking is through the branch of your financial institution. The post office also has, for certain financial institutions, usually the bigger financial institutions, also does post office banking, which enables you to access the account too. This is good for regional and remote areas.
I see. So I guess that also another thing that our audience may like to know is, especially coming to the end of the financial year, when we're going to lodge the tax return and whatnot, we do need to have some tax statements to issue that, the certain of the interest that we're earning. So how am I going to get the statements nowadays?
So statements these days are available through online banking quite easily. A majority of banks will enable you to download a PDF version of your statements through the online banking platform as well. Some banks do offer paper statements if you still wish to receive paper. However, they will most commonly charge a fee to issue paper statements as well, obviously for postage and also paper to utilize. So it is important to understand which is easiest for you as well, but I can say with ease that online statements accessibility is quite readily available.
Yeah. I usually just go into my mobile app and then download the statements from that. That's probably going to be the easiest way.
Correct.
Yeah. Now we touch on with all the individuals' accounts. I guess that also another thing that you mentioned earlier is some people may come as a joint. So they wanted to open up a joint account. Is it going to be the same jazz, with all the things that we discuss if we are going to open a joint account?
So the availability of accounts, it can be same for individual or joint. Just obviously understanding your own financial goals as individuals, regardless of also being a household or a couple, and what is easiest as a couple or household to understand what is easiest for you as well. The benefits of a joint account and a household with two people is it can be easier to pay for shared expenses from the one account, fewer banking fees if applicable, and all account holders oversee the money and transactions that happen on the account as well, which can make it easier for understanding what bills have been paid or expenses have been paid as well. So that is the pros, I would say, out of having a joint bank account for bills. There are some cons that can happen with a joint bank account as well, and some risks involved, which is always important to understand.
Sure.
So it's always important to understand that you're also sharing money with another person. So if you both have your salary go into the same bank account, everyday banking account, or if you have a joint savings account, that the both people have ready access available to that account as well.
Yeah.
And that at times for some people may not be the best benefit, depending on their household.
And I think that especially we are sad to see that, people usually come to the branch and to open account with a big smile because they are going to go through a really happy journey together. But sometimes they could come to the end that they will need to close the account because the relationship no longer exists. When they are going to close the account as a joint account, is there any requirement or anything that they need to know?
So this is also important when opening the bank account to understand the access and which a lot of financial institutions will offer security for the account as well. With two people on an account, you could have one signature or one person access required, which means any of the two people can access the funds at any given time, no matter if the other person isn't aware of it. Or you can set up, for example, for a savings account for two signatures or two access requirements. Basically, the simplest explanation for this is that if it's a two-person access required, you'll both need to be present in the branch, or for some financial institutions that offer joint access through online banking, one person would need to initiate a transaction and the second person authorize it as well. This comes back to closing a bank account. If you have a two-person authorization set up, say for a savings account, which can also be more secure, especially if there are a large amount of funds in a bank account, that it requires both parties to agree to close a bank account.
I see. Also, just before we wrap up with everything, I also noticed that another one is people may come to the branch to open a kids account. So with a kid, if I'm going to open an account for my children in the future, can I open an account under the child's name, or should I open an account under my own name then?
So you can open an account for a child, and it can be even for a baby that's 2 weeks old as well, as long as a birth certificate is provided and a parent and or guardian is present as well. Majority of financial institutions will only allow a parent to open the account, not a uncle, auntie, grandmother, or extended relative, unless they are a guardian due to unforeseen circumstances in which the parents are no longer around in the child's life. And the benefits to opening a, say, for example, savings account under a children's name is there is also certain tax exemptions on credit interest as well, which can be better explained also by accountants or Australian taxation officers.
I see. And I think that today we cover up pretty much everything. We have the accounts divided by transaction account and also the saving account for the individuals. And then we touch on with the joint. We also touch on with children. And we also mentioned about how to open account, how to close account. I guess that one thing that I would like to remind to the audience is everything that we talked about is all general in nature. So if you do need to have any of the requirement, do come to the branch and also all the financial institutes to ensure that all the needs are being discussed and also disclosed. I guess that one thing that I would like to also wrap up with is if you are going to open an account, make sure to know that you know about the purpose for it. So whether you are going to deal with your transaction or whether it's going to be saving for certain things in the future. So the purpose for the account is probably going to be the requirement. What will be the key takeaway that you will remind our audience for, Alex?
The key takeaway I'd ensure is obviously there is quite a lot of, can sometimes be quite a lot of options or with everyday banking accounts and savings accounts and terms deposits as well. It's just always understanding what your goals are when coming to open a bank account, what suits you, what is going to be the best type of account for you, the kind of accesses you need to access your funds or save your funds as well, and what is more convenient for you, because in the end the bank can open the account, but it's also how you see yourself using the account as well.
Perfect. Thank you, Alex, for your time to explain everything to us. So next time, Alex and I are going to discuss about the second part of the bank account, which is to set up your family trust or your partnership, or even if you are going to have your side hustle, and how are you going to set up your bank account for your business. So if you like what we share, or you think that someone may benefit from this content, please like, share, or subscribe our channel. And if you like to book the consultation with me about your money DNA, or if you would like to ask about some bank needs with Alex, the link and also the contact detail will be captured down below. Also, if you want to leave your questions or comment below, we are going to come back to you as soon as possible. Thank you for joining us today, and keep financially fit and healthy. We'll see you next time. Bye.